Hey everyone, it's Mike Valtos, and welcome to the Orderflows market analysis for Friday, September 22nd, 2017. And it's Friday finally. These these weeks really seem to drag on for some reason. But the E-minis, it closed right up near its high for the day. And at the end of the day, we recovered to close down slightly, but considering that we hit the weekly low in this session, down at 92, I believe it was, and rallied late to close the week for a marginal gain. I think bodes well going into the weekend, and obviously we'll see if anything negative happens over the weekend. And if nothing negative happens and you start seeing some signs of buying, perhaps we get a rally into Monday. But we'll see. Time will tell. It's only Friday evening right now. Now, the other thing, it seems that the data coming out, for example, the PMI that came out today, it's only showing limited hurricane impact on both manufacturing and service sectors, again, which is good. So what I'll talk about today is I'm going to follow up on what I discussed yesterday about huge volume, and there were some great examples today in the order flow. And again, it's only information you're going to get by looking at order flow. If you're looking at a normal bar chart, you're not going to see it. And if you're astute enough to look for it, then you could have taken some nice trades. And again, there's some great signals in the Delta scalper. So let's sort of jump into it. This presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Now, as usual, the same tools I use in this presentation is just to prove that I don't just jump around from the latest indicator to the latest indicators. The order flows volume footprint, order flows trader, which is a volume footprint chart, the Delta scalper, and the price rejector. These are the bottom two, Delta scalper and price rejector, are tools that read the order flow for you, so it helps make your trading a bit easier. So first, I'll talk about the YM, the mini Dow today. There was a great sign in the market today, so let's take a look. Okay, so mini Dow. This is this morning here. This is at 847. 830 is the cash open. You can see we moved from 02 up to around the 18 level. Sort of going sideways. Here you got a Delta scalper sell signal, and we came down into this area in this bar. Look at this, negative Delta, minus 500. But the bar is green. It's an up bar, and take it a step further. Look at the actual volume that's going through in there. You see very strong volumes. You see 355, 980, 265, 550. So you got close to 2,000 contracts going through here on the bid side. The market creeps up a little bit, comes back up into this area where you got the Delta scalper had given you the sell. You come back down in here, another big chunk of volume going through, 929, even here 372.26. You've got point of controls lining up here. So I know that there's buying in here. I know there's people bidding the market. When I say buying, in this case I'm talking about bidding, not buying the offer. They're mostly preoccupied with bidding this market. So you got 2,000 here, another 1,500, 1,600 around here. It's about 2,000 between 04 and 03. And so I know that there's support in this market. So, what do you expect the market to do? Do you expect the market to sell off, or do you expect the market to rally? Now, I know people are going to say, well, you look at this bar, the market sold down. Yeah, okay. Support and resistance is a level. It's not one price, right? So don't get fixated on one price. Again, where do we sell off to? We sold off down to this area where you have the support down here, the 550. You had 550, 265, 980. So you get down to 98. A realistic place to be buying this is around 02, 03, 04. And what happens is you just start going sideways some more. But again, you're still seeing buying coming in. Now it's actually happening at slightly higher levels. Here it was happening around the 00 level. Here it's happening around the 03 level, 04 level. Here it's coming in around the 06 level. So you've got buyers coming in. You're putting through some strong volume coming through here. Now you finally pop up. You pop up a little, the next bar here, get all the way up to 17. Here you get up into the 20s. Now you're still seeing some volume go through there. Then you get this bar here. You got single print. You got some signs of price rejection. You've got aggressive selling coming in. You don't necessarily see the support of buying anymore. So this is a sign that it can be changing on you. as far as I'll say changing, but rather this pop up here is potentially weakening. Then obviously next bar down, you're not seeing the supportive buying coming in anymore. Here you had some decent volume. Here you don't see that at all, and you've got negative delta, which is, you know, obviously not some good signs. And here you come back down. So, you know, realistically, what can you gotten out of this movement? I think if you got about 10 ticks, you know, that's great. But I mean, 20 ticks is you're not going to get, to be honest. Now people say, "Ooh, that's such a small move." Well, yeah, but these are what do you call slam dunk trades? These are the type of trades that it's so obvious. Yeah, you would like the market to rally 100 points, but you know, if the market's got its own thing it's going to do. You know, the aggressive buying, you know, we'll see what happens when we come back down. We come back down, where's the aggressive buying? It's not there anymore. So that's another sign too. So you had the strong buying here, strong supportive buying. Now you're coming back in here. You don't see the aggressive, the supportive buying anymore. By supportive buying, I mean what's being traded on the bid. It's not there, and the market starts falling down. Now you're starting to see a little bit coming in here, but that's it. And then the market falls off. So, you know, if you get on the other side of this supportive buying, what do you expect the market to do? Do you expect the market to rally, or do you expect the market to sell off? If the supportive buying that's there earlier is no longer there, what's going to happen? Nothing. It's not. There's no more support in the market, and you can see the market trades all the way down into the, you know, almost down to 80 here. But again, you know, it's not about getting 100 points on every trade. It's about finding things that, you know, what I call low risk trades. I mean, you know, what are you risking on this trade? You know, if you're buying it in here at, you know, around this area where the supportive buying is at 02, 03, what's your risk on the trade? Your risk is, you know, just a few ticks. It's not like you're risking 10 ticks on this trade. No, if it starts going against you here, you know, you're getting out. You know, if it gets past the low of this bar where you have the supportive buying, chances are there's no more supportive buying, and that's where you should be getting out. So it's not like you're getting in at 2300, you got to stop at 2290. No, your stop is really tight. It's around 97, 96, if that even. It's probably more realistically around 97, 98. All right, really quick, this is the soybeans. Lately I've been getting a lot of interest in the soybeans. You know, people have been asking about soybeans. Can I talk about soybeans? I think it's a great contract to trade, and it doesn't get a lot of the same respect as things like the financial contracts. But nevertheless, let's take a look here. So this morning, you know, 8:30 is the reopen. 8:33, you got the Delta scalper. You know, usually with beans, I like to give it you know, from the time it reopens at 8:30, I like to give it about 5 minutes. So I'm not really looking to take signals here. Yeah, you do have the Delta scalper giving you this buy, but I don't know. I mean, it does rally up eventually. There's a much better sell signal up here. Now you get up here to this high, and what do you got? You got a divergence here, no ratio. You come right back up with a bullish bar, but again, no bullish ratio here. Finally, you get the single print, the bearish ratio, but you know, you got the Delta scalper. You're on your high, and what do you got? You got your strongest delta, positive or negative, and then in this case it's negative, which is a bearish sign. And then, you know, you come back here, small delta, 7. Okay, you know, maybe you're a little bit confused. What do you do? And then boom, this bar here comes in, strong negative delta, 668. So, you know, you couple this bar here with this bar, what you're getting very negative readings here. You know, even this bar here, minus 700. So you've got, you know, 3 out of 4 bars up here on this high are extremely strong negative deltas. So I said you got the Delta scalper giving you the signal here. Now you've got, again, you know, something confirming it here. You got the ratio here. You've got, again, strong negative delta, and then the market proceeds to sell off, you know, from the 83.5 area all the way down into, you know, what is that, 81. And then, you know, eventually we do poke down below 80. We get down to 79.5 before we work our way back up. But you know, this was again, to me, this was an easy trade to take just by watching what's happening here in the deltas. You get up here, you got the Delta scalper gave a sell. You know, okay, this one didn't work out, but again, you know, this sell is a bit different than the sell that you had earlier. Up here, way overweighted in delta, in negative deltas. I mean, it's 1,000, 600, 700, and even, you know, like just before it, you got some small deltas, 78, 177. Okay, but here you got the negative delta, 339. Okay, it's negative. It's not the strongest negative, but then you got strong positive right afterwards. Again, positive delta, positive delta. It's just sort of hanging around here. This is your sign over these next 1, 2, 3 bars. If you're short this, that, hey, you know what, this trade's not going to work out. I mean, look at this. Where's your follow through selling? Where's your negative deltas in the bars? They're not there. Instead, you're seeing positive deltas. And then you get the big pop up here. Look at this delta, 1200 as you come into the high. This volume just gets scooped up, you know, 904. Trade some very strong volumes up in here. 1600, 1000, 753. Poke up to a new high, and then you start coming off, going into the close for the day. But you know, can you take this one? Of course you can. But you know, this one didn't work out. You could have, you know, you got out at a loss, a small loss. There's no way you would have made any money on this trade. But this one was a lot easier and clearer to see than this one. This one, you know, is not a good one. I mean, it's still a trade, but you know, you should be recognizing that it's not working out in here. Obviously, you'd have your stop just behind this level, like 84 and a quarter, 84 and a half. You know, so you know, if you don't get stopped out here, say you got to stop a little bit wider, you could be reading what's happening in here and maybe get out at a smaller loss. But you know, realistically, you would have been stopped out on that trade. Now this one, again, you know, it's never went against you. It never even came back up towards there. You got within a tick of the high. But again, this one is a lot easier to be taking because you got all this negative delta here. You're getting short, you want negative delta. If you're not getting short and all you're seeing is positive delta, that's not a good sign. Okay, now this is crude oil. Crude oil market was kind of quiet most of the morning, honestly. And this is the 8-range chart. You know, we've been in this sort of this range between, you know, 30 and 60 more or less most of the morning. And you know, just looking for any sort of signs in the market, and there really wasn't, you know, many really great trades. Here you had one, but again, this market just went sideways. I thought this was, you know, potentially a decent one. You got the buying imbalance up on the top, then you boom, come in here with aggressive selling. But then the market, you know, next bar sold off a little bit, but just mostly went sideways before rallying back up. And you got up here at you know, 1017. You got up towards the high here. You got all the way up to 76. Then you got the delta scalper coming in. You got the delta surge following it, actually. You know, so you got your swing high right off your high of the day, negative delta. Delta's getting stronger, -6, -48, -600, -1100. So you know, I know that sellers are coming in, so I thought this was interesting. You know, as you got up near the high of the day, what was happening? Were buyers coming in or were sellers coming in? In this case, sellers were coming in, and they're coming in strong. You know, it went from -48. So earlier, you know, you had been rallying up here with some nice positive deltas, 400, 500. Then it gets up here on the turn, it's -48, -600, -1100. At this point, what do you think this market's going to do? You think this market's going to rally or it's going to sell off? The answer is easy. It should be selling off. And what happens? Boom. Next bar, big down bar. Pretty quick, actually. So, you know, it starts moving from, you know, the 58 area down into the 46s. Gets all the way down in here to, you know, the low 40s, where you got some sign of some price support in here. Then it just sort of goes sideways on you. But again, you know, this is what I talk about with order flow. You know, someone asked me today, you know, where should you start with order flow? Well, delta, I think, is, you know, delta, point of control, and imbalances are the 3 building blocks. But I think the easiest way to jump into order flow is by adding delta to your analysis, and you can see it here. You know, I said this market is just coming up here near the high. How do I know it's the high? It's because that's the green line is the high of the day at 78. And what do you see? Right, you're coming up with some strong buying. Well, you get within, you know, 3 ticks of that high. Why aren't we going to hit that high? Instead, the selling comes in. You got the aggressive selling here with the imbalances. Point of control up near the top. So I know that there's some resistance up here because you got the heavier volume up there, and you got a weak delta. Okay, it's 48. You know, if you're going to be taking out the high, you're going to need some buying coming in. You're going to need positive delta, strong positive delta, not negative delta. And then in the next bar, you got stronger negative delta. It's minus 628. Okay, so you don't have the buying anymore. Instead, you got strong net aggressive selling. And then even in the next bar, even stronger net aggressive selling, minus 1,000, 1,130. What happens is this market sells off. You know, when you're looking at bar structures like this, taking into account that you just had a rally, what do you expect this market to do? Like when you're like I just showed you, when you're staring at it like this, what do you expect this market to do? Rally? No, there's absolutely no reason in the world this market should go up. And what happens is it sells off. I mean, that's what the market does when you're staring at this sort of structure, this price structure, or I don't say this price structure, but this delta structure. You know, that's again, I hate to use the term slam dunk because I'm not that much of a basketball fan anymore, ever since Michael Jordan retired. But again, that's, you know, it's clear as mud, or not say clear as mud, clear as day, right there for you. All right, so this is the bonds. You know, this market was it gave a terrific trading opportunity. So this morning at 4, you point of control at the bottom of the bar. You got your strong volume 552, 452. You got a bullish ratio, delta scalper, market rallied. But more importantly, later, just for 8 o'clock, you got something very similar at the same price actually, 06. You've got the bullish ratio. You point of control at the bottom of the bar. End up with small delta here. At this point, I'm not too concerned with the delta. Even the next bar, you got the delta scalper kicking in, and you got a nice little rally, you know, from the 10 area all the way up to, you know, what is that, 19? But this bar here, you know, this is a very potent bar. So look at this volume here, 1772. What happens is this market goes offered here. So it's 6, you know, it trades 6, 7 a lot. Then it actually goes 6 offers, 5 bid at 6, 1400 on the offer traded at 6. Nothing traded at 05, and that, to me, that's important. Okay, you know, it means that it was offered there, no interest, absolutely no interest for anybody to even trade a 1 lot there. And then the market came back up, started rallying. So you got very heavy volume supporting this market right here, and it's actually the same level as before. Now again, you know, I know unfinished business people say, well, look for the market to come back. Okay, well, you know, the way you're supposed to trade unfinished business is you look for the pullback here and then the market to shoot up again, not hit it and come off. Now, but in the meantime, I'll get to that in a second. Then you hit your high up here. What do you got? You got a ratio and divergence. So you got your signal here to be buying, and then you got your signal up here to get short. And, you know, this short here, you're talking, you know, you're getting short in this bar at, you know, 14, trades all the way down to 04. Then you start seeing some, you know, point of controls towards the bottom. But, you know, this is interesting because, you know, earlier here at 06, right, is where you had, you know, that heavy volume. Okay, and this is something we used to do in the bank is, you know, we'd have these levels, you know, where I knew there was support earlier, and if you break through it, watch out if it becomes I hate not your new resistance, because I'm not gonna look at this as resistance, but you know, it's one of those things. Okay, we used to sit around the office, and you know, people would be working bids and offers, and sometimes you forget about it, right? So if you're sitting on a bid here at 06, okay, because you know you got a lot to buy, you're buying it, okay, the market starts rallying, you better make sure you cancel your bid, because you know, if the market starts coming back down, chances are if it starts coming back down, you don't want to be owning it anymore. Instead, you want to be, you know, the market's going to blow right through that level and sell off. You know, it's just one of those things. You know, it's like it was a great buy here, but if it rallies all the way up here and starts coming off, don't look for it to be a great buy again. You got to be out of that position and going in the opposite direction. That's why you see a lot of aggressive selling in here, not aggressive buying. And like I said, the market sold off a little bit, and you know, we just sort of meandered the rest of the day here. But really, this was a great trade here, great opportunity. This high was a great opportunity. When you came down here, don't be looking to buy it again. You should be looking to be getting out of it or getting short. If you did, you could have got a few ticks. But again, that's something not everyone would be looking to do. But I definitely would not want to be a buyer there again. All right, so this is the euro currency 5-minute chart. And I just wanted to show you this because again, it sort of came up in a conversation I had with somebody. It's, hey, can I use a 5-minute chart? Well, of course you can. You can use pretty much whatever chart you want, but it's one of those things. You're using a 5-minute chart, you're going to get less signals. So you can see here, right? This is the main U.S. session. You got one signal here at 1 o'clock, and it didn't work. But then you got one here earlier. This one didn't work either. So people say, oh yeah, I got 2 trades this morning and they didn't work. Well, okay, let's walk it back here. Did you take this trade at 9:15, 9:20? When you get a move from 120.10 all the way up to up to this area up here, up to 40. Even if you held it up to here where it's at 120.30, it did sell off back down to 20, even got down to 15. But this was a nice trade here. I mean, to say that, oh, it had 2 trades and had the losers, well, you just happened to pick the time of the day with the 2 losing trades. Here's a yen. This is a 5-minute chart. There's a nice trade here, a nice trade here, a nice small one here, not much here, a nice little trade here. Again, I wouldn't be taking stuff around 3 in the afternoon on Friday. Even on 15-minute charts, this is an Emini 15-minute chart. And you caught the late rally in the day, which was nice. This one, that's not much of a move. I don't even know if there was anything yesterday. Well, yesterday, you caught this, the move from 3.5. It looks like a big move. It's only talking about 4 or 5 points here. Then this one didn't materialize into anything. So, I mean, it really depends on the type of chart. I mean, just, again, I get people, the 233 tick chart in the crude. Personally, I think that's too fast of a chart, but, if you're using it, yeah, you can get some nice quick hits, hit and run type trading, short at 64, covering it down here at 53, a little move here, nothing out of this one, hopefully something here. But again, it really depends on the type of trader you are. I mean, don't try to force the market to follow, well, not force the market, but I mean, don't try to do something that can't be done, in the sense that well, I use a 30-minute chart and I want to trade delta. At that point, delta is really kind of smoothed out for the day, that you're not going to get very good signals. You're going to get very few signals. Never mind, good signals. I think if you're using a 30-minute chart using order flow, it's kind of pointless. Order flow is, best used fresh, as the data is coming in. The longer you go out in the order flow, I think the less effective it is. I mean, even on a 10 range chart, you can see here, right? There's not a lot of action, even though I'd still be looking at the same things on a 10 range chart that I would on a 1-minute chart or a 4 range chart. Here earlier, this is last night at just around 9 o'clock, you have a ratio and divergence. What happens? Nothing. The market comes down, makes a new low by 1 tick. Then you got the divergence again. You can see it there. You've got the delta scalper kicking off. You've got a nice buy single print here. You've got the divergence and the ratio, delta scalper. That's what you want, right? What happens is the market just goes sideways. Eventually it does work out, but for the most part, the market just went sideways. And on like today, right? What's your range? 01 to 92, a 9-point range. So, be using a 10 range chart when, 1 bar is, basically the equivalent of, 2.5 points. Then, if it's going to be a tight range, if it's going to be a quiet day, you're not going to get many very effective signals. So anyway, I'm sort of starting to ramble on here. I sound like I'm half asleep, actually, when I listen to myself. So thanks for watching this. To learn more about order flow, go to orderflows.com. Be sure to subscribe to the YouTube channel. And I try to post videos up fairly regularly. And if you're interested in Delta Scalper, go to deltascalper.com to learn more about it. So thanks, everyone, and have a great day. Bye-bye.